Okay, folks, welcome to Market Wrap for the 5th. All right, so we had a close day for the markets, but we did have the futures market that was open until, I believe, 9:30 this morning. They are now open yet again. Let's let the futures settle down a little bit. They're doing what I kind of expected, but honestly, I think that where we're trading right now is not where we're going to be by tomorrow morning. And I'll talk more about that in a moment. So let's begin with the yield curve. So we sold off hard the other day. And where I go first is not to the stock market. I always look to the bond market. And what the bond market is telling us is that inflationary fears are rising. I am not saying that we are in a recession. I'm not saying that we're going to be in a recession of Q1 of 2019. All I'm saying is that we have price action in the bond market that is consistent with red flags in advance of a recessionary period. Now, we are now down on the month. Think about this. This is only the 5th of December. We are down 10 bips, 10 basis points on the spread between 2s and 10s. This is a big move and a major gap down from last month. So the yield curve clearly showing that we have the TIPS, Treasury Inflation Protected Security, another bond derivative that helps traders hedge against inflation. And you can see that we are moving higher this week. So there are inflationary fears, yet there's no fear by the bond market that yields are going to go higher. And what's also confirming that is the fact that the dollar is really struggling now. We're putting in lower highs on RSI. You can see by these topping tails that we are weak and in the process of possibly rolling over here. Volume rose. We may be forming a higher low here on Ultimate Oscillator, another sequential low on Stochk RSI. I think the odds favor bears, dollar bears. Now, with all that information at our disposal, we want to take a look at gold. What did it do? And it's validating our conclusion that there is fear in the market with regard to the economy. There is no fear of the Federal Reserve, and gold is now clearly breaking out. Let's take a look at gold from a higher level view, weekly view. So we have higher lows on RSI. We have now broken out above resistance. Stokes clearly hooking up. The week isn't over yet. I always have to caveat that. We are trading above the 200 period moving average. Next stop, 1246 on gold. Higher lows on price. So gold looking very strong. To the markets, the stock market, the transports, clubbed by over 4 1/3% the other day. Remember we spoke about the price action on the 3rd. It was a hollow-filled candlestick. We saw a lot of topping tails. I expressed my concern that we would probably get a pullback, perhaps a consolidation at best, with a bias to the downside. Well, we got a bias to the downside. The S&P 500 down about 3.25%. Same deal. Remember, we had broken out doji formation, and this is one of my more favored formations out of the small caps, out of the Dow Jones, especially out of the Dow Transports. Yet we gained no traction, support failed, and we are now yet again probing for a low. We have another lower high. Volume was very high. The IWM daily chart, here was that filled candlestick on the 3rd. What do we close down? By about 4.25%, a little more, on massive volume. So thank God we booked profits on the TNA. Thank God. The banks absolutely annihilated. The banks closed down 4 1/3%, actually more. And I think that they're going lower because what happened here is that we broke out of this triangle formation. Here's that hollow filled candlestick. which is a sign of indecision. And then not only do we break back down below this lower band of support back into this trading range, we broke through the lower band of support. And we did so on massive volume. So a lot of technical damage done here. The EDC, the emerging markets, we stuck with the plan. And thank goodness that we did, because when our stop got triggered, we still made a profit. When our stop got triggered, the shares just kept falling. I am going to entertain re-entering this trade. Big volume on the 3rd. But I want to see the dollar pull back. Oil, bearish reversal day. We gave up support, so we have a failed breakout. Expect lower lows. But I question whether or not we're going to take out prior lows yet anyway. I still like the Stokes. I still like RSI. We may get a retest of 11. Let's throw a line up here. It acts as a note to myself. Okay. And obviously some support there. Okay. So we may get a pullback here to the 1125 level. If we get a reversal off of that support level, well, then we may look to buy some oil using the UWT. I believe it's UWT. Yep. That's it there. UWT. All right, to Nugget. Not as earth-shattering a move on Nugget as what we saw on gold. But remember, let's go to the weekly chart. Remember what we have above here. We have a lot of resistance. Let's update this. Okay. So we are flirting with a breakout here on this chart. I love this. RSI. We have a breakout. This is like a cup with handle formation. There's your cup. There's your handle. Stokes are rising. Still down below 50 though. So the weekly chart is looking good. Daily chart could be a bit better. We did close up over 2.25% on the 3rd, but we closed off the highs of the day, and I just don't like that. And volume was a bit light. So, it's an up day. It was an up day. We've rallied nicely the past 3 days, but it just doesn't give you the warm and fuzzies yet. But I think that's going to change fairly soon, and I'm probably being a bit harsh on the price action, partly because we've been involved with these shares for so long. You can see that we hit resistance, we backed off. We've been involved with these shares for so long, we're just waiting for that breakout to finally arrive. Because Lord knows we paid our dues here. I like the higher low on Stokes, higher low on RSI. They're both above 50. That's good stuff. So I'm not going to be the least bit surprised to see a breakout here on NUGT. I just had hoped for price action that was more consistent with the price of gold. Now the DBA, I heard somebody come out today, it was on Bloomberg, and say there's a new bear market in agriculture. When I heard that, I said, you know what, I'm glad I own the shares. I'm probably going to buy more, because now they're talking about a bear market on agriculture. They should have been saying that back in May, not now. Really, we've been consolidating here for months, and now they're going to call it bear market in agriculture? Give me a break. Let's go take a look at the futures market. Okay, so taking a look now at the 4-hour chart, you can see that we have gapped down since reopening the futures market. This was no shock here from this morning. We had a series of higher highs. It was a dead cat bounce, doomed to failure, no shock. Now, what I think is going to happen here, I think we're going to defend and probably hold this support level. And you can see that we're well off the lows of the session. Let's drill down here to an hourly chart. So you can see there's a bit of fighting going on here, 5-minute chart. They're trying to break it out. And really, I wouldn't be surprised if they did rally it back by the open tomorrow. But if we fail and we close down below the support level at 26.75. Let's pull back. We'll come down here to 26.54. If that fails, we're coming all the way down here to what was the breakout point on the 27th. We will have done a complete round trip. And that, my friends, will be a bloodbath. So what's the strategy here that we'll employ? Well, if they rally it back, we'll watch and wait. You know, we need for a proper setup to come to us. If they continue to sell it off into the morning, well, we may have a situation where we're a bit oversold on an intraday basis, meaning a very short-term basis. For all intents and purposes, a day trade will set up. We'll look to buy the dip and then look to sell any counter trend rally and then just watch and wait, see where we close out the day. Let's take a look at gold. Gold is up about $1, and we are beginning to break out here on RSI. So RSI is looking good, price is looking good. The magic number is 1245. If we close above 1245, that will set the stage for the next leg higher for gold. Now, if we break down below 1238, we'll revisit this lower band of support. Let's check out the dollar. There's a lot of anarchy going on over in France. And you would think that the dollar would be the beneficiary of that anarchy, but we're really not. I mean, we did rally. We were really selling off on the 4th, but we rallied back to recapture support. But now we're flirting with breaking down yet again. At current, we are technically back down below this support level. We haven't closed there yet, but we are seeing topping action, a lot of resistance above here, and we're nowhere near the upper band of resistance. So traders are taking what they can and they're selling the dollar. This is a fairly bearish chart, despite the fact that we're up slightly right now. It's a struggle to hold on to the support level. And if we begin to break down yet again, expect gold to rally. Let's check out oil. Oil is down. All right, so we get the picture here. The futures market is under some pressure. The S&P 500 futures. Gold is rallying. Dollar is struggling. And oil is, for the most part, in no man's land right now. So we'll see what we wake up to in the morning. Perhaps I'll do a swing trading today, and we'll do an update on how the charts look. Everybody have a great night, and I will talk to you tomorrow. Be well.